Hello everyone. So today we are going to start a new topic for UGC NET December 2018 attempt, and the subject that we are going to cover is income tax, and the topic that we are going to cover is income from house property. So this particular topic of income from house property is very important for your paper 2 commerce syllabus, and a lot of questions have been coming in the past years from this particular topic. But as I have been telling you that we need not go much into the details and depth of this particular subject of income tax, because very basic questions, or you can say much of the factual questions are asked and not much numerical questions have been asked from this particular subject. So now without wasting our time, let us begin with the topic of income from house property. So before starting with these questions, I would like to tell you a brief about income from house property, and that is many a times we have a certain portion of our house that is left vacant, or we have extra space. So nobody wants to keep that particular property vacant if you can earn some amount of income, or if you can generate some revenue from that particular vacant property. So many a times people often give that particular property on a let out basis or on a hire basis to other people, and in return they receive a rent. So whenever you are receiving any sort of rent by letting out your house property, then any income being generated from that particular rent would be computed under the head income from house property. And the computation is very easy, but we need to understand the concepts very thoroughly. So let us first understand this first basic question, which will help you in understand that how do we actually compute the income from house property. So let us have a look at the question now. So in this particular question, there's a municipal value being given. So municipal value basically means the value of that let out house property based on the municipal corporation's valuation. So municipal corporation has the certain basis of valuing. So on the basis of that value, the municipal value is 40,000. Fair rent is 46,000. That basically means fair rent means the normal or in the course of business, the amount that is being charged in that particular locality. So let us say that you are living in X area, and the usual rent or in the nearby properties is approximately 46,000, which is being charged by other people. So this is your fair rent. Standard rent refers to the maximum rent that could be charged as per the Rent Control Act. So these are the three terms along with their meanings, and the actual rent received is what is being actually received by the person. So now in order to first compute the income from house property, you must first understand that we need to calculate the gross annual value. And how do we calculate gross annual value? Gross annual value can be computed by taking the higher of two of these items, and the first item is your expected rent, and the second item is actual rent. So higher of these two shall become your gross annual value. So first concept is this, the higher value out of this. Also, your expected rent is being categorized into three further terms, that is municipal value, fair rent and standard rent. Now in this case, the other concept is that in case of expected rent, the value which is greater in between municipal value as well as fair rent shall become your expected rent. So let us say that in case municipal value is 30,000 and your fair value is 40,000, so we'll be taking the higher of the two. So the higher of the two is 40,000, so we'll be taking the 40,000 amount, but there is a big but in this case, that has to be subject to standard rent. That basically means that in any case, the expected rent cannot exceed the standard rent. For example, in this particular example, where the municipal value is 30,000, the fair rent is 40,000, if the standard rent would have been 35,000, then the total expected rent that we must have taken or computed from this is 35,000. So this is about expected rent, and the actual rent could be anything. So in this case, if the actual rent is say 38,000, then by using the clear logic of the higher value from the expected rent and actual rent, the GAV would have been 38,000. So that's a very plain and simple concept, that you need to take higher value of the expected rent and actual rent. And when we talk about expected rent calculation, it is based on the higher value of the municipal value or fair rent value, whichever is higher, subject to the standard rent. Now we can use this particular logic or this particular setup to calculate the value from for this particular question. So in this case, the actual rent received is 43,000 and the higher value from municipal value and fair rent is fair rent, that is 46,000. But since we also need to take into consideration the standard rent, so the expected rent calculated for this particular question would be certainly be 40,000, because we cannot exceed the expected rent over and above our standard rent, and the actual rent received is 43,000. Now, as I have just told you here, that the higher value of expected rent and actual rent becomes the gross annual value. So in this case, the higher value is 43,000, that is your actual rent received. Hence, in this case, the clear cut answer will be 43,000, that is C. So that was all for this particular question. Moving to the next question now. What is the rate of standard deduction allowed under the income from house property? So the income tax authorities have allowed a certain standard deduction at a fixed percentage of your gross annual value in order to incur expenditure that is required for the maintenance of house and all other these expenditure. So there is a clear cut standard rate, and the rate that is allowed for standard deduction is 30%. Now you need to remember here that when we have received the gross annual value, we will be first deducting certain amount of municipal taxes, or you can say the house property taxes that are actually paid to the municipal corporation. And after subtracting municipal taxes, we will derive at a value which is known as NAV, that is net asset value. So earlier it was gross asset value, and when it is gross annual value, and when it is subtracted, it becomes net annual value. So the standard deduction will be allowed for 30% of the net asset value. So this will be your standard deduction. So you need to remember that 30% is the standard deduction allowed, but it is based on the net asset value. So the clear cut answer is 30% in this case. Moving to the third question now. Quantum of deduction by way of interest on money borrowed for repairs and renewals of self-occupied house property. So many a times people borrow money from bank in order to construct their house property, in order to make repairs and renewals, and whatever interest that is being paid on the money borrowed is also allowed as deduction from the income and house property. So that becomes logical also, because if you are earning some amount from a particular property, then any such expenditure which are being maintained in order to construct that building or repairs and renewals should also be deducted from the same income. So hence, interest on money borrowed is also allowed as deduction. But when we are talking about repairs and renewals, the limit on the amount of deduction is 30,000. So this is the amount of limit per annum. So you can claim deduction up to the amount of 30,000 per annum from your income from house property in case of repairs and renewals. So you need to learn this particular term of 30,000, and it is per annum. Moving to the next question now. Deduction available under section 24A is dash of GAV. Now at once, the moment you see the term of deduction, the clear cut answer that might come to your mind is 30%. But you need to be very careful with the question as well as the terms, because here the question is asking that what percentage of deduction is allowed of GAV, that is gross annual value. We have just read in the previous question that the deduction is not allowed on gross annual value, but rather it is allowed on net annual value. So the term that we derive after subtracting municipal taxes from gross annual value is net asset value. So in this case, the answer would not be 30%, rather it would be D, that is none of the above. So many a times such tricky questions are asked. So you need to be very careful with the questions and read the questions properly. Moving to the last question for the day for the topic of house property. Quantum of deduction by way of interest on monies borrowed for construction of self-occupied house property is dash. So now I was telling you in the previous question that if you are incurring any sort of interest due to the borrowing of money for construction of self-occupied house property, it is allowed as a deduction, and it is allowed as a deduction under section 24B. So under 24A, you are allowed deduction for standard deduction of 30% of the net asset value, and under section 24B, you are allowed deduction for interest on money paid. Now, what point you need to be careful here is that in case of repairs and renewals, if the money is being borrowed for the purpose of repairs and renewals, the limit that is made is rupees 30,000 per annum. But in case you have borrowed money for the construction of business, then in that case, the amount of limit that is being allowed as deduction under section 24B is 2 lakhs. So you need to be very careful and read the question very thoroughly, that whether it is focusing on repairs and renewal or it is focusing on construction. So since in this case the question is talking about construction, the answer to this question would be C, that is rupees 2 lakh per annum, and this amount would be per annum as well. You also need to remember this. So that was all for today from this particular topic of house property. I hope that these questions would be helpful to you for your exams. Also, I would like to remind you once again that we'll be continuously posting the questions relating to such topics from paper 2 commerce till your exams. So do stay tuned to our channel Anuj Jindal as well as DU High. We have also given our contact details in the description of this particular video. If you want us to guide you on how to prepare for UGC NET exam, feel free to contact us. We'll solve your doubts as soon as possible. Thank you and have a nice day.